It is Monday, February 5th, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a very productive get your ass kicked at Jiu-Jitsu Monday. Something very, very surprising happened. As a matter of fact, I'd signed up a little over almost 2 years ago now. Jeez, it's gone by so fast. But anyway, not quite 2 years, probably a year and a half now. But anyway, I signed up for jiu-jitsu, and I began my jiu-jitsu journey then. And when I did, there was a very special gentleman running the classes, and unfortunately, he'd had several personal issues. I guess his father had passed away, and then he'd had a couple of really significant injuries set him back and kind of knock him off the mat for a while. And he was just on his way back to getting on the mat, and of course, he was rolling it a little bit too hard and messed up a janky knee. But today, he actually managed to make it into class and make an announcement that he had intended to continue coming in, at least doing the Monday classes. And I got to tell you that it felt really good to have him back in class. I mean, I don't care that the man can't do backflips or anything at the moment. His mind, as far as jiu-jitsu setups and whatnot, is, in my mind, he's why I stuck with it as well as I did early on. I don't think if he weren't there for the first few months at least, when I started training, that I don't know that I would have stuck with jiu-jitsu. I mean, because honestly, most of the time, even now, I just get my ass kicked most of the time. But I mean, I'm starting to get to where I can recognize an opportunity now and then. Anyway, yeah, it was really an interesting experience to have him back in class, because even without his belt showing, the whole place just took on a different tenor. Even people who hadn't had an opportunity to train with him before, they immediately deferred to him. And like I said, I don't even think he would have had to have his belt present to be providing that kind of a commanding presence in the room. I think everybody would have deferred to him anyway. But yeah, like I said, it was really great to have him back in class, and his know-how as far as jiu-jitsu, I feel privileged to be training with him, and so hopefully he'll be able to make his appearances more regularly in the gym. And so, as to crypto, because this is not a jiu-jitsu show, this is about cryptocurrencies. And I know a lot of you guys are feeling some pain out there these days, that the markets just haven't been all that nice to you. Well, today and yesterday, or not yesterday, last week, definite indicators that we are not alone, and that all of us are going to get our asses kicked by the markets at one point or another. That just because you're in conventional markets, that's no safety. I mean, if you had any illusions about that before, now. But it's funny to me that most people still forget that when they're looking at a chart for a cryptocurrency or or any kind of stock or security or whatnot, they're looking at an exchange rate. When the available price for an item, whatever it may be, whether we're talking about bonds or securities or stocks or coins, that it's actually an exchange rate. The price you pay is an exchange rate. At that moment, that is the exchange rate. And if you can keep that in mind, it makes understanding what's going on with the markets that much easier to do. Because if you just stay on the surface and you're just looking at the trading pair and you're not thinking about the dynamism underneath, a lot of times you'll confuse the volatility for of what's going on at the moment for something that's only occurring with your stock or coin or treasury or whatever it may be, and not the underlying unit that it's being evaluated in that exchange. And with regard to USD to Bitcoin, that's what we're talking about. We're talking about an exchange rate between Bitcoin and the US dollar. And so now, thinking about it in those terms, what's been happening on the dollar side? We know what's happening on the crypto side. What's happening on the dollar side? Is there anything happening over there that might be, I don't know, kind of affecting the way that markets value the US dollar? I mean, gosh, what could it... Oh, wait a minute. Didn't Janet Yellen just step down as head of the Federal Reserve? I wonder if that might have any effect on the relative value of the US dollar versus everything else. Oh, and wait a minute. Didn't they just have talk about a possible interest rate increase? Didn't we go through another interest rate increase recently or something to that effect? Gosh, I wonder if those have anything to do with the precipitous drop in everything else. I wonder. If you listen to this show long enough, you already know the answer to this. It's no fucking mystery to you. I mean, it might be a mystery for a lot of other guys, but again, it's because they're eyeballing their charts, and it's like they're chart blind. It's like nothing else exists, just the chart, just the moving averages, and yeah, whatever, dude. You have to understand, this is not a closed system. Okay, there are stimuli affecting it on both sides of the exchange rate and all throughout the market. There's a lot of interdependence out there from one resource to another. Oil prices fluctuate. Everything gets fucked. I mean, come on now. You can't ignore the fact that you are in a broader market. And that it's not just your currency or your treasury or your whatever that is experiencing volatility or a change. It could very well be the underlying instrument that you're evaluating it in. Anyway, let's go ahead and throw down into some music. I haven't actually picked out anything, and I have not picked out anything for where we're going to go with today's episode, but I do have a fresh white paper or two hanging about, and some regulatory stuff that we may dive into. It's just a matter of how we feel on the other side of this music break to decide where we're going to go with it. Anyway, with regard to our first dance, it's got to be Interbeing by Prong here on Coin Metal. And that was Metallica with Welcome Home Sanitarium. We didn't carry it over quite as far as normally, but, wasn't really necessary. Oh, shit, somebody actually had a request. Yeah, I do actually listen to requests, so, if you've got one and you're in the IRC chat room, or you're in the Verge Currency chat room, hey, don't stay silent. If I've got it, I'll play it. And I don't have this. This is King 810 Devil Don't Cry official video. I'll have to check it out. Not right now. And if I like it, I'll buy it and go from there, Yeah, it's like there's a few bands that people have recommended to me that have just blown my fucking mind. It's like, why didn't I know about these guys before, Like 12-Foot Ninja. Honestly, those guys should be on all of the fucking radio stations. Their music is very good. It's highly complex, and it's certainly very diverse. It crosses so many different so many different genre lines, it's kind of hard to classify exactly what their music is. I'll just say it's 12-foot ninja. You know, it's not merengue, it's not metal, and somewhere in between. And I mean, all kinds of little flirts and dashes of other shit too. So it's, like I said, it's very interesting band and very hard to classify. So anyway, as far as what we're going to cover today, and I have kind of put a little bit of thought into this, but not too much. I honestly, I've been just like you. I've been sitting in front of charts all day, going chart blind, going, oh my god, when's it gonna stop? Make it stop! No, honestly, I prepared for these drops a long time. As a matter of fact, this is my habit, okay, is that I'll look at the chart, right, and I'll say, oh, it's going to go to this price. And I don't know if it's so much a prediction, an expectation, or an instruction. I put in a fucking buy at the price that I think it's going to go to, and I leave it. I leave it. That's why I say I'm like the worst trader in all of crypto, because I do that. And, you know, I'll log back on and about 2 weeks later, and my buy will have gone through. And then I set up a sell for it. You know, I pay attention. I don't just, like, you know, arbitrarily set it. I look at my charts. I study the available information. I make a decision on where I think it's going to go before it switches the trend. I stay a little bit under where I expect it to peak at, just because I definitely want it to go off. But I do get a little greedy sometimes. And I put in a sell price for it, and I log off. I walk away. Because, I don't know, I guess I just have that much confidence that my buys and my sells will eventually fucking go off. And so far it's been working. So, you know, I can't argue with success. Now, am I missing a bazillion and one fucking opportunities to make money on in between? Absolutely. I should be trading a lot more actively than I am, based on the information that I believe is going to happen. But I find that if I get too short, you know, in the duration span that I'm paying attention to, I always get fucked up. You know, I'll do stuff like I'll you know, close an order that I had, you know, I'll close it, cancel it, and then take the volume that I was going to do on that and work it. And then, you know, before I know it, it's already gone to the point where I would have sold or I would have bought at, and I've done very little more than made the exchange richer on fucking transaction fees. So, you know, I had this discussion with my old man, and I said basically that he was going through this idea for a trading idea, and I said that's death by 1,000 exchange fees. Because that's pretty much, you know, the kind of thing that would happen. You know, the action happens so fast in crypto that, you know, by the time it got to where you thought it was going to get, it's already past that, and it's onto a different movement by then. You know, and I mean, unless you're really paying attention to it, it can get away from you quick. And so I like I said, I don't even play the really short game. I look at it and I'm like, okay, it's going to go here. Buy. Okay, it's going to go there. Sell. And, you know, I mean, I'll do a shorter interval now and then, but for the most part, I'm not in any panic. I expect these markets are going to continue to be funky and fresh and up in the air for a great while. I mean, we're starting to assess, we're starting to figure out exactly what it means to be making good on your promises here in crypto. And it's becoming a bit clearer who's been negligent in their responsibilities, you know, and who hasn't been paying as close attention to the market sentiment as they actually should be. And we're going to figure it out. I really think that there's one change that a lot of people have been discounting. And I want to look up something really quick here, because we have the Google, and it's the 21st century, and we can do that kind of thing. But I swear I need another, arm. I've been wanting to get a something to hold my microphone, but it seems to me that by doing so that I wouldn't be able to use the proximity to the microphone in order to enunciate certain parts of the show. Proximity is a great deal. Let me see something here. So, Federal Reserve interest rate hike. Let's see what the Google has to say for us. And Fed could surprise markets with more interest rate hikes than expected, and that was December 29th of 2017. Let's look for something a little bit more recent. Let's try past week. And, oh my gosh. Here we go. See, we're going to read this article. And if it confirms my suspicions, I will be referring you back to probably several episodes that I've already done and posted on YouTube a long time ago. Anyway, this is on QZ.com. It's worth betting on a surprise U.S. interest rate hike in 2018. This is the title of this fucking article. For a decade, inflation has been, as described by of the world's foremost economists and at the central bank for central banks, stubbornly low. PDF may be clicking on that. Cheap money provided by central banks. Who authored this thing? This is written by two people. Oh my god. Neither one of you read this fucking thing aloud. I can tell. And this is written by Helen Edwards and Dave Edwards. Oh shit, they're married. Never mind. That fucks your entire objectivity, Dave. I don't give a fuck what you think. It fucks your objectivity, because you can't say to her, "That is like the worst constructed sentence I have ever read, woman. Can you please fix that?" You can't, because you have to live with her. She makes food, you make food. She cleans things, you clean things. It could get ugly. Continuing on. Cheap money provided by central banks' quantitative easing has not resulted in price or wage inflation, only asset inflation, and that's a bunch of bullshit. This has confounded central bankers and economists, resulting in many questioning the central tenets of monetary economics, namely the relationship between wage and price inflation and spare capacity in the economy. Edwards, you fucking people are disappointing me. There's not a comma in that sentence, and that's a fucking run-on sentence, people. Third grade. Third fucking grade. Lettering and. Now, there are signs that inflation is returning in the U.S. While the most cited inflation indicators remain relatively stable and within desired bounds, a few key indicators are suggesting that there could be more going on, like gas prices. This has put investors on alert, because unexpected inflation suggests there's something new to know about future prices. Even before U.S. stocks last week had their worst week in 2 years, inflation was rated as one of the top investor concerns. Paywall for 2018. And the break-even inflation rate, the difference between the yield of a nominal bond and an inflation-linked bond of the same maturity, has been climbing steadily for the past 6 months, indicating that investors expect inflation will increase. It is generally assumed that investors have both the incentive and aptitude to accurately price inflation, so market indicators are often seen as more reliable than surveys. Inflation is rigorously tracked via the Consumer Price Index, CPI, and families of Producer Price Indexes, PPI, on a monthly basis. Each index tracks a multitude of variables. The tricky part is that because a change in inflation is the result of many other changes in the economy, like the money printing, that take time to show up. That is, inflation is a lagging indicator. Yeah, they don't bother to tell you that they issued it, and you just notice that your suppliers are charging you more of them. There is a lot of room for judgment in how to assess the many factors. The Federal Reserve raises the benchmark interest rate in times of economic growth, partly to temper inflation, actually just partly to steal your money. So far, markets are expecting 3 interest rate increases in 2018 from the Fed after 3 last year. That would be interesting. We think the inflation narrative in the U.S. will change in 2018, possibly resulting in the Fed, as of today, under new management, and we're definitely clicking on that one, adding a surprise 4th rate hike. Here's what that might take, and the particular metrics we are watching. Prices. While every measure of retail pricing is trending upwards, one in particular is above its typical range and trending higher: median CPI. The median price change is the price change that's right in the middle of the long list of price changes that are used to calculate CPI, and according to new research done by Cleveland Fed, is one of the better predictors of near and longer term price rises. The underlying inflation gauge, UIG, is also on the rise. The UIG is important because it represents the most robust measure of trend inflation. It is derived from a large data set, not just price variables. It is based on the premise that if there are trends in other economic and financial indicators, then it's likely that there are trends in underlying inflation. Oh no shit, you think? Producer price indexes for commodities and materials are generally falling. However, the ISM Manufacturing Index, a survey-based index that sources information directly from the front lines of company supply chains, is rising. I swear these fucking people do not know what punctuation is. When it's rising, it means that employment, production, inventories, new orders, and supplier deliveries are also rising, which is good news, but is also a potential indicator of imbalances forming. This index has been steadily rising for a couple of years, from a low in January of 2016 of 34 to a recent peak of 69 as of November 2017. We are watching closely for any departure from its typical upper limit of around 75. Wages. Wage stagnation has been an ongoing problem. Yeah, it's called the minimum wage. But wages seem poised to move, and they could move faster than expected. It's a complex picture in the U.S., but we have narrowed our focus down to a couple of measures. The National Federation of Independent Businesses surveys small businesses in a variety of labor market indicators. The NFIB percent raising worker compensation survey is an important insight into the pressure on small business to to raise pay. According to the survey, the shortage of qualified workers reached a record high in December, suggesting that wage pressure could build at a higher rate than anticipated. While comparable data for January hasn't been released, the top-line wage growth figure for January supports this trend. Average hourly earnings for all private employees increased to $26.74 in January from $26.65 in December. Yeah, whatever. We are also watching wage growth statistics focused on 4 particular groups. Part-time workers, because they have seen some of the least recovery. Young people, because they are a proxy for the ability to switch jobs for a higher wage. Lower skilled workers, because we think the ability to automate low-skilled jobs is overstated. I agree. Metro areas, as a rise, may indicate a limit on rural to urban migration. The Fed voters. The people who constitute the voting committee, those who decide whether to raise interest rates in response to inflation data, rotate. Not only is there a new chair in 2018, but the voting members for this year represent a shift towards a more hawkish view, according to analysis from BOA-ML Global Research. As a consequence, the Fed may start to think harder about what to do about an unemployment rate below its below its definition of full employment, 4.3 to 5%, even with inflation running close or fractionally below target. If early indicators of price pressure show nuance and employment indicators suggest that there is no capacity in the labor markets, we may well see that extra rate rise in 2018. Yeah, this is a very shitty article. It's full of good information and whatnot, and kind of what we were anticipating, but it's overly wordy, and even 2 people didn't bother to fucking read the thing aloud because they would have caught some glaring errors. But to the point that they're making, interest rates are potentially going to be rising. And, this has impacts for us. Every time there has been a rise in the interest rate for the U.S. dollar, there has been a reciprocal impact on the price of Bitcoin. And although people don't associate it, there's been also reciprocal hits in the Dow. You can see it on the fucking chart. These are typical emotional responses. It's like this. Why do you invest in the stock market? Why? You take your money and you invest it in the stock market or the CME or the CBOE or wherever the fuck, investing it because you expect that by taking your money and putting it to work in an investment, you will get a higher return than if you were to hold on to it. Now, when the bank that prints those things is running the printing press like they're cranking out toilet paper, okay, and they're waving the magic wand and putting a few zeros on the left-hand side of the decimal point at the bottom of the sheet there, that has an impact on sentiment. People say, fuck, I'm going to lose my ass if I keep my monetary value in US dollars or euros or yen or renminbi or whatever the fuck. And they say, where can I fucking put this monetary value where I can hold on to it, keep it secure, easily access it when the markets start to get sane again, before the valley, after the valley actually starts to find a floor and bring it back into the market. How can I do that? How can I do that quickly, easily, now? And crypto is like, there are a myriad of types of different investment vehicles that you could be putting your monetary value in and retaining it during times of dips in the vehicles that you primarily invest in and spend. I mean, if you can make your transitions as seamless as possible, where you're going from fiat to Bitcoin to Ethereum or to Doge or to Verge or to Litecoin or whatever the fuck coin, all right? When you can get that cheap and fast, and preferably on chain, that is the kind of tool, that is the kind of frameworks that we need, the infrastructure that we need for the future that is ahead of us. I really believe that, like, the first half of the century, we're going to be cleaning up the detritus of not only the previous 30 years, but the previous century or two, maybe even a few further back than that, before we really get going forward. I don't think we're done dealing with yesterday yet. We gotta deal with yesterday before we can deal with today, and then after we get today down, then we can move on to tomorrow. But I think one of the good things about crypto is that it allows you to jump from one to another. And I mean, I've moved monetary value around from exchange to exchange, from monetary unit to monetary unit. I don't even think about it as dollars anymore. I don't think about it as Bitcoin anymore. It's a bunch of fucking numbers. It's got a set exchange rate right now. It's just monetary value to me. It's just a bunch of fucking numbers. And I zap between them as quickly and as I need to, as has ever been possible by man. I mean, the longest transitions, and it's still true, is from crypto to fiat. Even US dollars going from an exchange to a bank account is slower than any cryptocurrency exchange. It just is. I mean, I have to wait days to move money from an exchange till, it's been definitely received by my bank. But, I can zap monetary value from one exchange to another, and I just did it. I actually had some funds still stuck on Bitfinex. Amazingly enough, more than I put in there. And I withdrew it to another account. Fuck, it was easy. Happened within minutes. I was watching the thing on the Block Explorer. I knew when it got its first confirmation. I knew when it's got its 12th confirmation. I knew when it was actually, 100% confirmed according to the exchange, and when they moved the money from one wallet to another. I could see that on the fucking blockchain. I mean, if I were to look the coins up now, they're either still in the... Well, yeah, they'd still be in the wallet because I haven't actually done anything with them. But I mean, if there was any activity with them in addition to that, I'd be able to see it on the blockchain. And I mean, to me, that's just like... That's awesome. That's 21st century shit. But like I said, that is a faster and... more transparent means of moving monetary value around than has ever been possible. I went to a boat show recently, and I had an opportunity to meet a really nice couple and talk to them about crypto, and they had enough interest in it to stand around a moment with me and talk, and then later sit with me and talk about it. But they were perfectly able to understand it the way I was saying it. Now, I don't know why other people have trouble doing that, but they seem to pick it up just fine, and that gives me some sort of hope that, for them, already being users of credit cards and whatnot, they've already broken the barrier from the U.S. dollar or the check, as far as a abstraction of value, that they use as a monetary unit. They've already made that break from that to a credit card, to a debit card. So the making the transition of what we do in crypto and the differences between it and conventional banking, they got it really, really quickly. And so that gives me hope, because it means that for them, it's just going to be a matter of opportunity. If they get an opportunity, when they get home to sign up with an exchange account, they probably will. And that's all it takes, folks. That's what that adoption thing is all about. Y'all still talk about mass adoption like it's some fucking goal. You know what? I'm not an adopter. I mean, I've adopted coins that I use, that I rely upon. But to me, that's just, it's like I'm using a tool. My toolbox is just a hell of a lot bigger than a lot of other people's. Because I'm not restricted to U.S. dollars. And I'm not restricted to just dealing with just banks. So, to me, it's just more freedom. And, so I've got a couple tabs in here open concerning regulation and the hammer down. And we may actually dive into that kind of stuff, but I think we're on the right track as we're going with this interest rate business. Because honestly, I think it's the least talked about and the biggest factor in the impacts that we're seeing. I mean, it only makes sense to me, because crypto, like it or not, it's among the most speculative markets out there right now. I mean, and when I say speculative, I mean volatile. I mean pump and dump. I mean, it's kind of, people look out of the corner of their eye at it still, So it's like the investment vehicle of last resort for the vast majority of people, right? First, they do things like start up a brokerage account with somebody. Next, they're day trading or trading on their own. They get an Ameritrade account or some shit like that. But we're among last on that list. They've already considered buying fine wines and vintage vehicles and shit like that before they're coming to us. But we're also the first that they leave. So if there is an issue that people wanted to respond to, where they're looking out for their own bunghole and they're trying to maintain some of that monetary value, the first place they sell out of is their crypto positions. The next place they go out of is their down positions, their conventional market positions. The next place they go after that is all their hard commodities that they've accumulated, collectibles, real estate, gold, silver. But this is only when the U.S. dollar is worth more to retain. And at virtually 0% interest rate, that just wasn't the fucking case. And every time the Fed flipped the on switch on that printing press, there was a reciprocal loss of confidence out on the market. And people said, I can make more money by investing it in securities on the Dow exchange than I can if I just put the money in my bank account. I'm going to lose more money with it just sitting in the bank account than if I buy, 100 shares of Amazon or some shit like that. And then from there they start getting into crypto. But anyway, I think that if there is any kind of leveling out, which there will be. There's always an inflection point when the interest rate bump is not exceeding the velocity of the accumulation of interest on our existing debt. There's always an inflection point. And so this dip in all the markets, it's temporary. It's all fucking temporary. The monetary value has to have somewhere to go. And banks are already buying stocks. They've bought all the fucking real estate. They've got all the fucking gold and silver holdings they feel comfortable having. They're all over crypto like a motherfucker. Give me a fucking break. The money has to go somewhere, and the printing presses did not stop. Once the market figures out how to deal with the additional interest rate, they're going to be looking to put their monetary value somewhere else. That's all there is to it. Because, like I said, the US dollar can't get strong enough. They can't throw enough interest on it to exceed the velocity of the accumulation of interest on our existing debt. They just can't do it. You got $20 trillion in existing debt, and you're accumulating fucking more debt on that in interest every second. Anyway, let us depart from this and throw down some additional music. And, fuck it. When Worlds Collide, Powerman 5000, here on Coin Metal. And that was Slayer with Ghosts of War. Yeah. Every once in a while I type out a funny on on Twitter, and this is actually the thing that got me thinking about the underlying monetary unit in all of our exchanges on all of our markets. And this guy Joe Weisenthal posted up this chart, and it's got the line of the Dow and also Bitcoin on it, right? And how it goes down over time. And it says Bitcoin and stocks bottomed at almost the exact same moment. Don't know what to make of it. So, my remark on it is, would it help if I told you that you're looking at a chart showing the relative exchange rates of commodities versus the US dollar? What do these exchange rates have in common? Why do people always assume the volatility is happening on just one side of these relationships? And it's true. You know, you think just because you got a few of them in your pocket that there's no underlying dynamism affecting the relative value of them versus the commodities that you wish to purchase with them. And that's kind of what I was poking at during that last article with the the Federal Reserve's actions with regard to their interest rate hikes and so on and so forth, and their printing. But yeah, the gas prices are a big indicator for that. You want to keep a finger on the pulse of it. Watch your gas prices. I used to call it the AM/PM index because we had a gas station chain here, AM/PM. And I think they may have been bought by somebody. I'm not entirely sure on that. But they are no longer AM/PM, so I can't really call it the AM/PM index. I'll have to figure out another name for it. The gas index. And basically what it is I take 5 prices for the lowest price gas there is. And I add them all together, divide them by 5, and that's the price, the median price for the 5. And there are factors, as far as like the proximity to their supplier and so on and so forth, but you can generally find a rough estimation, or at least you get a good marker for what the average price is for gas. And by doing that, you can see over time what the relative value is of your dollars. And you can see it expressed in everything else too. But it's far more noticeable with regard to your gas, because that one they update the fucking price for that all the time. You know, it's kind of insidious the way they creep up on you, but nonetheless, it is far more noticeable than things like shrinkflation and so on and so forth. You know, that we notice a lowering of volume of quantity of goods that we purchase for the same amount. You know, where they'll have like a box of cereal. Cereal's the worst one. Where the box itself hasn't actually changed size, but the bag inside of it is like, 7% smaller. Containing 7% less product. Anyway, I got this article here on CNBC, and this is kind of along the same tack that we're taking. It's not on its face crypto related, but I think if you consider what I'm saying versus what you're actually seeing out on the market, it might provide a little better indicator of something that's actually affecting the price of Bitcoin, as opposed to things like, banks saying, no, you can't buy fucking Bitcoin with a credit card backed by us. I mean, that's honestly, that to me is just prudent. No, I'm not going to extend you credit to kick me out of my job. Come on, man. Anyway, here it is, CNBC, and who's the author on this? This is Jeff Cox. So, yes, double penis. Fed leaves rates unchanged, but gives more aggressive inflation expectations. And this was authored on Wednesday, 31st January 2018. It's a little earlier, or later rather, than we would have liked, but oh well. Here it is. In Janet Yellen's final meeting as Fed chair, the central bank decided Wednesday against increasing its benchmark interest rate, but indicated it expects inflation pressures to heat up as the year moves on. The policy-making Federal Open Market Committee said current conditions indicate that the overnight funds rate should remain anchored at 1.25 to 1.5%. The decision, which came at the end of a two-day meeting, was widely expected. Rather than looking for a move on rates, market participants were watching the January Fed meeting for clues on how the central bank might proceed for the rest of the year. According to the projections released in December, officials expect 3 rate hikes this year, so long as there is no significant disruption to market conditions. However, the market recently has been entertaining thoughts that the Fed could add another increase, likely at the final meeting of 2018. Government bond yields have been moving up considerably in anticipation of inflation pressures and a more active Fed. Quote, "We had a hawkish hold here," said Joe Brussels? Brussels. I'm sorry, dude. Chief economist at RSM. Quote, "What that growth forecast implies is there are upward revisions coming to growth and likely to change in the balance of risks due to inflation moving toward the central bank's target." Bruselius thinks the Fed should alter its forecast for 3 rate hikes this year to 4. A tweak in the post-meeting statement could influence the market's view on the rate path. Quote, "Inflation on a 12-month basis is expected to move up this year and to stabilize around the committee's 2% objective over the medium term," the statement said. Quote, "Near-term risks to the economic outlook appear roughly balanced, but the committee is monitoring inflation developments closely." The observation in inflation differed from the December statement, which noted that core and headline measurements have declined and were running below 2%. In addition, this week's statement noted that, quote, market-based measures of inflation compensation have increased in recent months but remain low. A tweak from December, which simply noted that the measures remain low. Inflation has been running consistently below the Fed's mandated target, most recently hovering around the 1.5% range, but there have been signs lately that wage pressure is heating up. The Employment Cost Index, a gauge believed to be watched closely within the Fed's halls, showed a 2.6% increase for the full year in 2017, the biggest gain since before the financial crisis. Prior to the meeting, the market was pricing in just a 28% or so chance of a December rate hike. The market widely expects a quarter-point increase in March. Other parts of the Fed statement were little changed from the December meeting. Committee members removed language that discussed the effects that violent hurricane season had on economic activity. Officials had not expected the storms to have long-range impacts on growth, but did note that there would be effects over the near term. The decision not to hike rates passed unanimously. The January meeting marked Yellen's last as chair. Jerome Powell will take over as chairman within the next few days. And you know what? We're going to study a little bit on Mr. Jerome Powell, because I think his tenor, as far as how he expects to be running the Fed, I think that's going to be having a significant mark on us. And like I said, you can't really escape it, because your most readily monitored price of Bitcoin is translated in U.S. dollars. I mean, there are people that pay attention to yen and all that other business, but for the most part, the operational one here anyway is U.S. dollars. So, again, that told us a little bit more about what the Fed intends to do. There was an indication there, as I had stated, something of an interest rate hike. And like I said, I think this one, it reminds me a lot of my my instructor coming back to the school today, because I mean, this isn't like a hit on anybody or anything like that, but it seemed like things were much more formal when he was present. There was more dedication to the attention to detail on things. He's a very, very specific man when it comes to instruction, and I got kind of scared of asking questions at first, because every time I would ask a question, he'd say, "Well, show me what you mean." And I mean, that gets kind of intimidating, especially when you got like 12 to 14 people in class, and you don't have really a whole lot of social exposure otherwise. So, but he put me on the spot a couple times when I was asking questions, and you know what? After the first time, I'm like, no, I'm not going to be afraid of this, because I'm not the only one getting something out of this. Somebody else in this fucking room probably had a question and was too afraid that he would have them demonstrate to ask it. And so, by backing down or getting intimidated by that, I wouldn't be doing anybody any favors. So I just said fucking went for it. Anyway, like I was saying, there was a little more decorum to things. And I think that's kind of what's happening right now, is people are expecting there to be a change in the tenor of the Fed. Got a new guy in there don't have Janet Yellen. And so that is going to cause a policy change. I don't care who Jerome is. He's not just going to be doing the same thing that Janet Yellen was doing. And it's funny, Peter Schiff has characterized it as stuffing more the action of going from Janet Yellen into Jerome. That the Fed, before handing off to Jerome, Janet Yellen was basically stuffing the dynamite stick with more gunpowder before she handed it off. I don't characterize it quite like that. Something similar, but to me it was more akin to she pulled the pin out of a grenade and said, "Here, hold on to this." And walked away. I mean, that seems like a more appropriate metaphor, honestly. Just given the kind of things that we're seeing out there in the market. And I really think that crypto can be a positive vehicle in what's going on out there right now. But only because in our markets, we're far more involved, I think. You know, I just out of the fact that we're the miners, you know, we're the exchanges, we're the traders and whatnot. I mean, it's a little bit different than conventional markets. I mean, there are traders there. There aren't any miners, and if there are, they're out in the field. They're not participating directly on the Dow and whatnot, and if they are, they're not mining gold. Or whatever the fuck they're supposed to be mining. They're buried in a chart somewhere. But anyway, on to Mr. Powell. And like I said, I think this is a little bit of a decorum change. People are like, oh shit, Janet Yellen's out, this guy's in. What kind of guy is this guy going to be? Is he going to be just like Janet Yellen? Or is he going to be like Greenspan? Or is he going to be like Bernanke? Or who the hell? Who's he going to be like? What's it going to be like with him at the helm? So let's dive into this. This is again on CNBC. This is a little more current. This is actually 8 hours ago. Here's everything you need to know about Jerome Powell, and come on. Oh no. Don't tell me this is just a fucking video. Son of a bitch. Apparently it is just a video. You know what though? Google is here to save us. And we'll do so again. Alright. So we could go wiki on him. But let's go with this one. Hopefully it's not a fucking video again. CNBC, you bastards. Alright, this one is not a video. It's got an associated video, but it's actually got an article that we can read. So here we go. This is again on CNBC. Market Insider with Patty Dahm. I'm going to assume by the name, no penis. Markets putting Powell to the test even quicker than other Fed chairs. I'm not going to read the bullet points. On day one, markets are already putting Fed Chair Jerome Powell to the test. Market volatility, largely absent until last week, picked up in the final days of Janet Yellen's tenure, with interest rates suddenly breaking out of a long-term range. Long dormant inflation expectations suddenly started to rise, and triggering a sell-off in the Treasury market. Yields which move opposite price shot higher, spooking stocks. The Dow, after a bruising 666-point loss on Friday, was sharply lower Monday in volatile trading, dropping more than 1,500 points at one point before coming back. The market action can't be blamed on Powell's ascension to the Fed chair, but he will have little or no honeymoon period before being expected to raise interest rates and continue to unwind continue the unwind of the Fed's balance sheet. Yellen didn't raise interest rates for nearly 2 years into her term, but then did hike 5 times, as well as initiating the program late last year to scale back the central bank's massive balance sheet. Quote, "There's a confluence of factors, one of them being we have a new Fed chair," said Ward McCarthy, chief financial economist at Jefferies. Sorry about that. There was the feeling Janet Yellen would always bail out the market. That was the notion during her tenure. Powell seems more inclined to let markets do what they do. But in fact, the S&P has fallen on the first days of the past couple of Fed chairs. Powell's first day on Monday coincided with a 4.1% drop Monday. The index fell 0.9% on Yellen's first day, and it was down 2.2% on Ben Bernanke's first day. Jim Caron, fixed income portfolio manager at Morgan Stanley Investment Management, said he does not believe the market sell-off has anything to do with Powell's appointment. Quote, "It could add some uncertainty, but it's not like anything we haven't known about," he said. McCarthy also noted the long period of time since the last market sell-off and the tax cuts being an inflection point. In addition, quote, "There was a wide range of indicators that inflation is accelerating, which is what causes rates to rise," he said. Coincidental or not, during the first months of each of the past few Fed chairs, there was a fairly significant stock market sell-off, the most pronounced of which was the 1987 market crash just 2 months after Alan Greenspan became the chair. In the case of Powell, the market is anticipating tighter Fed policy both from higher interest rates and the balance sheet unwinding. When Yellen began her term February 3, 2014, the market had already been selling off for nearly 2 weeks, and it bottomed out early on, with a 5.4% drop by the S&P 500 over 14 days. The market then swooned again that year, falling 9.3% from September 18th to October 15th on an intraday basis. Bernanke's term as chair was greeted by a 7.8% sell-off starting May 5, 2006 through June 13th, but Bernanke also had to suffer through the stock market collapse during the 2008 financial crisis, so his first sell-off was a minor trial. Paul Volcker, who waged a battle with inflation with dramatic rate hikes, began his tenure in August of 1979, and by October, the S&P 500 began a sell-off that ended in an 11% decline by November 7th, 1979. The next year, there was a more than 20% drop. Greenspan was tested the most by markets in his first few weeks. He started as chair August 11, 1987, and by August 25th, the market had started a sell-off that would include the October 19th, 1987 stock market crash. All told, the S&P 500 plunged into a bear market, losing 34.5% by the time it reached the bottom on December 4th. Sam Stovall, chief equity strategist at CFRA, said some of these declines could be normal for the market and not the result of uncertainty around a new Fed chair. Quote, "To be a doomsayer and mention it in conjunction with a new Fed chairman is not making any bold prediction," he said. But he did say the current sell-off has a different feel than a quick 5% correction. Quote, "It feels like 1987 in microcosm, meaning that I think it will be sharp and swift, but I don't see us going into a bear market," he said. When Powell was picked as chair, the market was soothed because he was seen as being very similar to Yellen in terms of policy. Quote, "Everyone's hopeful," Jack Ablin, Chief Investment Officer of Crescent Wealth Advisors. "I think the market will look at him pretty well, giving him the benefit of the doubt. If I was in his position, I would not want to do anything, not say anything, be quiet," he said. But Powell's job could be tricky. The new Fed chair may be faced with a hotter-than-expected economy after the tax legislation and higher inflation that could force Powell's Fed to raise rates more than 3 times the central bank currently forecasts for this year. That could continue to rattle markets, potentially causing the Fed to pull back if the market moves are dramatic enough or affect credit conditions too much. Past Fed chairs have been said to use monetary policy to set a floor on equities. The so-called Greenspan put of the late 1980s was later adopted by others. Quote, "He's going to try to normalize rates if he can. That's the mission. That's the new phase. I think the balance sheet is less of a priority," said Ablin, adding, "There will continue to be fairly easy policy as quantitative easing is unwound." Quote, "This is like going on a diet by eating 2 Twinkies a day instead of 4. Ablin said if any problems arise, central banks will be back in easing mode. Analysts said the Fed's challenge this year is also that other central banks are now moving toward tightening, with the European Central Bank paring its bond buying. U.S. Treasury yields had been moving higher with bonds as a result. Japan is also looking to reduce stimulus at some point. Quote, "It's not going to get any easier," said Ablin. "We'll see if there's a Powell put." Yeah, so it'll be really interesting. That is to say the least. Especially as we're seeing other market pressures. And I think crypto's ascendancy really couldn't come at a better time. I mean, really, it could not have come at a better time. You know, you got this burgeoning industry that commands you to participate, not just be a subject of or a user of, an end user like many software programs are, but an actual participant. It says, "Hey, yo, get the fuck in the game, kid." And that's a lot different than, you know, the DAO or anything on the DAO. I mean, you can invest in a company and the company can do good, but you're not actually the company itself, or you aren't necessarily participating as the company itself. You know, you're not on a production line, you're not making sales for them. I mean, they may be using their market data to push something, but that's about the extent of your real influence there. Whereas cryptocurrencies, you can play both ends of it. You can be both supplier and user. It's pretty damn spiffy. Anyway, let's go ahead and throw back down into some music. And got some Ministry playing in the background here. And I'm definitely feeling it's time for Ministry. But what song? There are so many good ones. I like Want Yourself, which is playing right now. But I haven't played this one in a while. Rio Grande Blood, here on Coin Metal. And that was Nevermore with The Future Uncertain. Yeah, I don't play enough Nevermore. I need to fatten up my repertoire. I really like their music. It's a shame about World, but you know, I guess those of you who actually got to see them live with him as the frontman, you were very, very lucky. Anyway, another thing that could possibly be affecting cryptocurrencies in particular is these teases about regulation all over the place. You know, it's one of the side effects of us being a global market or global markets. Anything that happens anywhere can affect all of us. And I think this is more to my point about the mutually assured destruction aspect of cryptocurrencies. See, now we have an additional motivator not to bomb people, because if we bomb them, they can't buy our coins. Let that sink in for a little bit. You know, this is the fastest growing industry on planet Earth right now, and it's drawing more interest every single day in all kinds of industries that never even thought of a blockchain. I don't think that half the applications it's being put to will actually be useful in the longer term, but that's just me. You know, I'm negative Nancy on this. I think that the biggest things that cryptocurrencies can do have already been done with them. You know, I mean, I guess it's just lost on people how momentous the first transactions, the first actual, you know, I'm buying something with Bitcoin, I'm selling something for Bitcoin exchanges were. Because that rewrote the rules of money right there. As soon as that happened, the magic wand that the Federal Reserve and other central banks have was suddenly not the only magic wand in the fucking world. Now anybody with enough motivation and enough desire to download the code and recompile it, put their little pizzazz to it, and re-release it out there, had the magic wand too. Has the magic wand too. This means anyone, anywhere can pick up the magic wand and be Janet Yellen or Jerome Powell, as the case may be now. You know, have your own Jerome Powell put. Or at least have that power, rather. Whether or not you'll actually exercise it, it's a whole different story, especially in the world of cryptocurrencies, where the people that are mining your coin actually have a say in that. As in, like, the number and interest and all that. Anyway, continuing on. Got this article here on the Bitcoin News. New rules? CFTC chairman open to federal regulation of cryptos. Yeah, of course he's fucking open to it. I'm sure he's very realistic about the prospect too, and says, oh yeah, whatever. But we'll read this and find out. This is authored on February 5th of 2018. Not in the future. Ooh. And this actually had an original source. So we're going to just right click on that and make sure that we get the real scoop. Never. Oh, fuck this. Don't go to this website. Just digest it on the other one. Oh, let's see. It's not terribly long either way. Anyway, continuing on. To date, the U.S. has lacked a uniform regulatory framework towards cryptocurrencies. This differs strongly from other jurisdictions, many of which have taken more solidified stances towards these instruments. This could be changing, however, as U.S. securities regulators are now more open than ever to the prospect of increased compliance. The U.S. has remained as one of the lesser active countries in addressing cryptocurrency regulation. By extension, countries such as China and India have both adopted more hardline stances against cryptocurrencies. Not true at all. New era of crypto regulation. The groundwork towards regulating cryptocurrencies may have been laid last December when the U.S. Securities and Exchange Commission took legal action against a company holding a, quote, scam ICO for the first time when it filed charges against Plexcoin. Fortune reported that the Plexcoin ICO was a, quote, a blatant ripoff that promised 13-fold returns for investors within a single month. Prior to charges, the ICO had raised $15 million. Holy crap! That's more than zero, dude. Why would you bust down on the ICO? They might have actually made good. You never know. Continuing on. Fast forwarding to the present, the U.S. Commodities Futures Trading Commission, CFTC, is finally on the verge of charting a more concrete course on the federal regulation of cryptos. According to a recent testimonial by Christopher Giancarlo in a U.S. Senate banking discussion, the committee honed in on virtual currency regulation in depth. More specifically, the committee recognized the potential for overblown hype or outright mania that could represent a bubble. Moreover, the CFTC and SEC, along with other federal and state regulators and criminal authorities, will continue to work together to bring transparency and integrity to these markets, and importantly, to deter and prosecute fraud and abuse, he explained. Quote, these markets are new, evolving, and international. As such, they require us to be nimble and forward-looking, coordinated with our state, federal, and international colleagues, and engaged with important stakeholders, including Congress, said Mr. Giancarlo. However, it is important to note the regulatory limitations currently governing the debate on wider oversight. For example, in 2015, the CFTC determined that virtual currencies such as Bitcoin met the definition of a commodity under the CEA. As such, the CFTC does not have regulatory jurisdiction under the CEA over markets or platforms conducting cash or, quote, spot transactions in virtual currencies or other commodities or over participants on such platforms. That being said, the CFTC does have enforcement jurisdiction to investigate via subpoenas and other investigative powers and, as appropriate, conduct civil enforcement action against fraud and manipulation in virtual currency derivatives markets and in underlying virtual currency spot markets. These parameters were clarified today in the latest committee meeting on cryptos, which can be accessed by the following link, which we are going to follow. Indeed, the CFTC certainly seems poised to now take a more active stance towards federal regulation of virtual currency. What exactly this entails is still uncertain, though 2018 could see a more unified agenda on the subject. And up until now, each state has harbored different opinions on the matter, with some expressing more embrace towards crypto regulation than others. However, an overarching federal regulation would be a different matter entirely, with the framework for such measures possibly being drawn up in the near future. Yeah. Let's see. Is that part of the article? Can't tell. I don't think so. Anyway, it looks like it's done. So, there you have it. I think that it's still uncertain as to what their regulatory tenor is going to be. And we're going to follow up that article, though. What's this business? Oh, shit. It's 42 pages. We're not going to do this today, but we are going to do it. Probably tomorrow, Wednesday. Fortunately for us, there is quite a bit of citation, so when it's digested down, there's probably only really 20 pages of just a couple paragraphs. Yeah, it's got plenty of citations and shit that we may or may not quote. Anyway, so as far as the any federal regulation in cryptocurrency, honestly, I think it's best to be considered like this, as an afterthought, meaning that after the crime is actually committed. You know, the thing with Plexcoin there, I think that's overstepping their bound, honestly. And I thought a few other movements that have been made were overstepping bounds, because in fact the one element that was missing out of all of a lot of the criminal prosecutions that we've seen so far or not criminal, but enforcement actions we've seen, they've been ahead of the quote-unquote crime. There's still uncertainty as to whether or not there was actually a crime, or that a crime was intended, or that a crime was actually committed. I was thinking about like Charlie Shrem. I don't think that he was actually conducting a crime. I mean, really, let's take a step back here. I remember listening to Joe Rogan one time, and they were talking about how, and it wasn't just in Joe Rogan, I had heard this elsewhere too, that there were banks on the border of, I think it was Texas and Mexico, where they had these teller windows, and actually I believe it was on the Mexico side. They were importing so much fucking US dollars that there was a specific case that they would use, because they could fit like $100,000 in each case, right? And so they redesigned the teller windows at the banks so they could accept these fucking boxes, or these suitcases full of fucking money. Okay, now, what is the difference between knowingly laundering money for drug cartels, going so far to be so proactive about participating in this activity that you literally redesign the interface that you receive money through to facilitate a more efficient transfer of the funds? And Charlie Shrem selling some dude some Bitcoin that he would later use to purchase drugs. I don't really see that there's a difference there. If one is not considered a criminal activity, then neither should the other be. If you're not going to prosecute everybody involved in that with the same ferocity that they went after Charlie Shrem, what the fuck good are you? I mean, obviously you're just going to be selective about who you hit, so what's the difference between you and a protection racket? I mean, really, we got to consider these things. It's not just the label on your desk that should matter. It's the way you conduct yourselves, the activities that you involve yourself in. And back to the point, I think that some cryptocurrency projects are in fact scams. We've read plenty of white papers on this show that could possibly fall under the category of fraudulent or scammy kind of activity. Or potentially so. Potentially. Again, no crime has actually been committed as of yet, to our knowledge. And until that is verified through, actual prosecution, or actual, people actually getting burned, what the fuck? Why are you even involved? Why are you even considering it? Now, don't get me wrong. I'm all for being proactive. But really, the most proactive you have to be is watch the Twitter feed. Follow these people. They've all got Twitter accounts. I mean, go to the NSA. I'm sure they've got a copy. You could go back as far as you need to go. They got that big ass data center in I think it's Utah. I mean, what the fuck? They store it all anyway. Why not put it to good use, right? But the indicators of scam coins, and I think I've done that once on this show, and I may yet do that again. Just because there are new people coming into this space that discover me about when they discover trading or shortly thereafter. And so I think it'd be kind of useful to give a little brush up on what we consider scam coins or good indicators of scam coins to be. And, well, fuck it. We've got a little bit of time left. I might as well go through a couple. Outrageous claims of return. Okay, this is like kindergarten with regard to investment advice. If somebody is guaranteeing you a return, they're most likely going to defraud you. And I mean that is period. That's been my experience. Doesn't matter what market we're talking about. If somebody is promising you glorious returns, promising you, chances are there's some scammery involved. And you are most likely the person being scammed. So, when you're looking at a cryptocurrency to invest in, consider its claims. Do they claim to be associated with gold? Do they claim to be associated with any other commodity or abstraction of value? This again is kindergarten investment advice with regard to cryptocurrency, but you know what? We all had to go through kindergarten. I wasn't born late, and I'm not late now. Like I said, I'm the worst fucking trader in crypto. I make no bones about it. But these are things that have guided my investing and kept me from losing a lot of money. Because I've watched coins come and coins go. And a few little elements stick out that are always the same. Again, association with any kind of direct association with a fiat currency, this is a fucking major red flag. Major red flag. I mean, that's why Tether, when I read Tether's fucking information to begin with, I'm like, oh, I'm staying away from this, as far away from it as I possibly can, because I can see great potential for abuse. When was the last time their books were actually audited? Their actual US dollar or yen or whatever monetary value held where? When was the last time it was audited? And what were the findings when it was audited? Do they have fidelity to this 1-to-1 ratio that they are claiming? That is the question that's on everybody's mind there. And I say there's potential for no. There's always been a potential for no. So you can't just disregard that stuff. And I keep getting people making claims like that, making claims of fabulous returns. I saw people tweeting all over about BitConnect, and I warned people. I said, this thing is likely to steal your money. You're likely to be asked out in the end. And some listened and some didn't. And for those of you who didn't, well, hey man, I can only be so sympathetic. You were warned. Anyway, let's go ahead and throw back down into some music. And I have not played any sixth tonight. We need some sixth. It has to happen. Yeah, scroll. There we go. Vivid here on Coin Metal. And that was Within the Ruins with New Holy War. Yeah, I don't know. I don't know if we're done with the sliding. We may be. You never know. But I do have one last little tidbit, and we'll go ahead and fire it off really quick here. It's only a couple quick paragraphs here. Cryptocurrency meltdown continues. Bitcoin sags to $7,000 level. This is authored on February 5th of 2018, and no indication of penis. Anyway. Like an ice cube in the sun, prices on virtually all cryptocurrencies continued to melt today. A brief weekend rally proved to be a dead cat bounce, and the relentless plunge continued this morning, bringing bad news, red arrows, and questions about where this all finds a floor. More than $100 billion has been taken off the overall market capitalization in the last month. At mid-morning, Bitcoin stands at $7,200 per single coin, with Ethereum suffering a massive drop to $710 and Ripple down to 70 cents. Bitcoin Cash is back below the $1,000 mark, sitting at $928, while Litecoin is at $127. Monero is down more than 20%. to $182. Choose your bad news reason for the plunge. Increased drumbeats for regulation by government and investigation into Bitfinex and Tether for price fixing. Facebook canceling cryptocurrency advertising, or simply a cool down as the market digests the wave of ICOs and tokens that have emerged. Bitcoin market highlights for the 24 hours ending February 5th, 2018 at 1 p.m. Eastern Standard Time. The highest price seen was $8,604.08 at the HIT BTC exchange at 1:12 p.m. yesterday. HIT BTC saw $66,908,600 of Bitcoin change hands. The lowest price seen was $71.3130 at Kraken's exchange at 12:48 p.m. today. Kraken's 24-hour volume was $104,601,000. The average price on the surveyed exchanges as weighted by volume was $7,953.31. Volatility was a bit above average, with Block Tribune Volatility Index coming in at 52.3%, or 52.3. A higher number indicates greater price volatility, with 50 describing an average day. These statistics were consolidated from 11 different exchanges. It includes only BTC/USD trades, and only on those exchanges that had at least 1% of the total volume of BTC/USD trades during the measurement period. Well, that gives us a little indication of what has actually happened. What will actually happen in the future? It's anybody's guess. But I would be willing to bet that Jerome Powell's being put in at the head of the Fed, I think that's actually a little bit bigger contributing factor to this latest correction than most people would like to admit. And I'll say this, I say that because if I wanted to, how should I say this? If I wanted to adjust the numbers down to lower the expectations of an incoming boss, I would do so, about now. Be right before the guy really has an opportunity to assess the situation from inside the doors. I would want to get my negative corrections down now. I'd want to do it now so that he has an opportunity to both see things as a little closer to what they really are. Actually, however close you can actually get to that from within the Federal Reserve. But I would try to readjust. I would try to get my numbers a little more pessimistic right off the bat. So again, he can make corrections based on that information. But, it's something also of you don't have the last boss to impress anymore. I'm sure if Janet Yellen, didn't immediately walk away, right? If she had some 2-month advisory period or whatever, the correction would have waited until after the 2-month advisory period was over, and then they don't have to impress Janet Yellen anymore. But the expectation is to maintain, at least meet current expectations. And like I said, you got this new boss coming in. The tendency is to want to game things down so that whatever recovery is experienced could at least be attributed to them. Anyway, that's it for this episode. We will be back again on Wednesday at 8 p.m. Pacific Standard Time, as always. And, until then, I want y'all to trade safe. Definitely look out for your own interests there first, folks. There is, as far as accountability is concerned, at the end of the day, it is yours and yours alone to impress or depress. So consider that one. Do your fucking homework, because you could just as easily be walking into a trap as you are walking out of one. And watch out for your own bunghole, because nobody else is out there doing it for you. The CFTC, the IRS, the SEC, these people can only do it in the rearview mirror. They can kind of act proactively, but the chances of them damaging potentially good projects that would have made good on their promises, if they get too zealous with their preemptive activity, that certainly could result. So, I would rather it be you that anticipates the loss before you experience it than the Fed or Federal Reserve or anybody else looking in the rearview mirror to help you correct. And it's with that I want to go ahead and close this out. I want to put in a little bit of prong here, and I'm trying to find the exact song to do. And damn it, there it is. Test. This is only a test here on Coin Metal.